Welcome, guys. Welcome. Get yourselves in. Money Mike's here back with another one. All right. It's getting serious now in the markets. I want you guys to get yourselves in. All right. Get yourselves in. I always try to make sure I give enough time to get you guys, in the right direction. So get yourselves in. It won't take too long. A few more minutes and then we're in. But I would say to you guys that it is a very important time that we're in this market. So I would suggest that is the best time for you to pay attention. Don't get distracted by anything whatsoever, please, guys, because it could affect you negatively. All right. So I'm going to start off with Bitcoin right here. Let's have a look at the charts here from the beginning. So I'm laying out everything. Here's our algorithmic level, same time that Bitcoin was announced on Bitcoin Day. All right. Now, what else do we have going on here? Well, on the weekly structure, I've always said it. I'm using Hugo's Way, but I will switch between Hugo's Way, IC Markets, and TradingView by the time I'm done. But we have Omega, that's a good word. We have a mega trigger here. And the trigger for me, again, I haven't changed my mind on it. Despite, charts never lie, guys. The candlesticks are liquidity. It's the money of the market, whether it's institutional, wherever it is, that's the money in the market. Now, according to what we have with the weekly price action here, the body of the candle has closed beneath the weekly here, even though the price returned back above it. But this break beneath here means that we have a very major breaking structure of the demand zone, which in essence was holding the price for the entire 2021. Now, since we've had this break beneath here and we've hit the algorithmic level, I told you whatever happens there, the price would do some sort of price action movement. And that's what we've had. So I want you guys to be well aware that the market is definitely going to give us a stronger sell. We're not completely done yet with the sell. Okay. Now the trigger for it has happened, and the trigger is right here. I've been talking about it for weeks on end. Okay. And as I said to you guys, supply and demand to the left of us is going to be highly important for us to map out what we're doing. Now, I'm not saying Bitcoin is going to crash to zero. I'm not saying that whatsoever. All I'm saying now is if we layer everything on top, if we look to the left, as I've said to you guys, in crypto, because it's such a new space in terms of price data, there's only 12 years at best of price data, starting with Bitcoin and then other cryptos as they came along, or altcoins as they came along. So at this current stage that we are in the price, okay, every time we're looking at the recovery phase after this massive drop in price, we are looking to use demand, especially what I am anyway. As a technical analyst, the best way that you can approach recovery is to look for the areas where the price went long from last to see what kind of reoptimizations are there. So for example, this was one of the areas we were using to the left. Another one that we were using for quite a while until the price broke past it was this one right here. So if you notice here, the price was operating in this area for many, many weeks. We had supply formed here. We had many attempts of the price to break past it, but we didn't have that. In essence, we had a sell. The price did break past and beneath it, and then we've seen the price take off for a low. So this zone here has filled this purpose for us, and now we're good to go for what we need. So when the price does these kind of things, you want to look and pay attention to it. The last one that we did have, until we had this massive break past and then this massive breakdown, was this demand zone here. This was another area of reoptimization of demand. The next, which is where we are right now, is here. Okay. And there aren't that many as you may think when it comes to the analysis. There is another one, which is above here, demand again. All right. And what we want to see is every time the body of the candle closes back above demand, that signals to us that we're back into areas of demand that we haven't seen since, the price was in its last phase here. So my suggestion is these are the last two. Aside from that, the tiniest one, which we can actually omit and just use the supply zone right next to it, is here. Once the price breaks past this area of the supply at one point in history, there won't be anything to the left, if you want to put anything left, but anything to the left or in previous times that we could use as a price reference. We will go back into price discovery mode until the price produces another way for us. So this is why I would say to you that it's highly important you pay attention to what's going on. Now, again, why am I saying that we have the price trigger? Now, the price trigger, I told you guys about it again a while back, and it's this D1 supply zone right here. Now, this D1 supply zone, as I call it, small but mighty, is an area that the market has been using to move both long and short. So on the short side, okay, the price used this supply zone to give us a short, or was instrumental in the short that we already saw in the market. But what we saw 17th of May, the price used this area to continue the short leg that we were seeing. When the price was ready to get onto the other side of things, we had a break above here. So the 9th of August was the first time we saw the price close above this supply zone. And so we have reoptimization. In essence, the price would reoptimize this area as we've seen, form an A, B, C swing right here, and then gave us the long from 43 up to Bitcoin day, basically. So after we've had this movement here, notice I told you that the moment that the body of the candle closes back beneath here, we're entering into price action or supply scenarios, which were what we saw back in May, which puts the price in danger of pushing short. Now, if the price pulls back, it just means, to me, a rebuy or a cheaper discount. It doesn't mean that we're panicking or anything like that. But what I am saying for sure is that since we've closed beneath this area here, the price should be continuing on the short side. Now, I told you that on the order book, there's some inefficiency here that needs to be filled out. And the price didn't do that when it was reversing on the 20th. So to me, I still think that the price needs to get here. And when I show you guys on IC markets what the price looks like, I think it'll give you even a better view as to what I'm looking for when it comes to this market and what the price should be doing. But for now, anyway, Bitcoin has triggered this area. I do expect the price to probably pull back here, but definitely we should be looking for a short back to here. All right, now I'm going to go into IC markets here and pull up my Bitcoin analysis. I want you guys to see what's going on right there. And I'm going to map out everything from the beginnings. For those of you who may not know exactly what I'm talking about when I talk about Bitcoin on IC markets and the gap. So I'm going to start from the beginning. Let me pull up a fresh chart on here and then switch over. So let's get a fresh chart right here. All right. So fresh chart without the grids. Let's go. Here we go. So fresh chart for you guys. Switching over. I'm going to start off from the weekly here. So the weekly structure is the same across both brokers. And here's the validation point, as I would call it. Here is the algorithmic level that I'm looking for. The price has done what it needs to do very well. We've hit this price point at Bitcoin day and we've seen the price push short. Now on everything is the same. So on the weekly time frame, there is a weekly demand zone here formed, the third week of the year. We have the close and the break above, and now the price is returning. So why am I discussing this now? So if you notice on this chart, things look quite different from what you've seen on Hugo's Way. IC Markets has one of the most reliable feeds in the world, is one of the largest Forex brokers, and also commodities and equities and futures. Now, I've looked at the price feed for you to understand what I'm about to say, I've looked at the price feed for the last 3 years available, and I've looked at every occurrence of a gap, whether it was a price feed issue or whether the market was, whether the market was basically leaving us a gap. Now, when I look at the price feed here, I've looked at the open and closes, because if you just get into trading, one of the things that happens when there's a new day opening, liquidity is usually low for the new market day. And so sometimes there are price gaps that are caused from a lack of data coming into the broker's feed, or on the other hand, sometimes you can see that you may have gaps that are formed literally from liquidity gaps, which is a lack of liquidity. So price points weren't filled. So for example, this gap right here, what this represents is there was a high amount of bullish orders, so high volume, but the liquidity wasn't matching to be able to produce this. But the high volume drove up the market, okay? And the price continued with certain price points not being filled out. And this is what happens with liquidity gaps. Now, they're not as common, okay, as you may think, but when they do occur, they are used. Now, if I go back here we had some gaps being made, all the way back in 2019, and it took quite a few weeks, but you see in this month here, or 22nd of the week starting 22nd of September 2019, the market filled out this gap right here. So that gap was filled. All right. Now we have another gap here that was created, which was a liquidity gap formed from this massive panic sell-off from the coronavirus 2020. And notice it took a few weeks over here, but just about 6 or 7 weeks later, the gap was filled. All right. So in essence, every gap that you see has been filled so far. Now, the lowest down gap on Bitcoin right now is this gap right here that I've been mentioning for many, many months, which is between 9,583 to about 9,000, according to what I have here, 9,920. This is it from the daily or from the weekly, but it's actually about 9,638, something along the lines of that. So why am I discussing this now? Well, in every market, guys, when there's inefficiencies in the order book, the only thing that can push the price to where it needs to fill out, something of this nature would be from some sort of fundamental news or fundamental and technical convergence. At the moment, the technicals of Bitcoin and the fundamentals of Bitcoin are quite divergent, okay? Which can happen in any financial market. So what do we need to do right now? Well, at the moment right now, looking at this market, there are liquidity gaps that need to be filled. And because they need to be filled here, we need to work out whether the price is going to do this in this bull run or into bear market, or whether the market is going to do this at another time. Now, when I look at the price here, and this is what I'm saying about these lows here, first of all, on here, I think is even more clear that these lows here in the market, there's orders here, there's liquidity here, which the market needs to go for. And this is why for the short side of things, I'm looking for a target back down here. Now, I don't know what fundamental news piece could happen, but coincidentally, the price hit the validation point, this algorithmic level on Bitcoin day to the T, and started to short. So it makes me think that it's not coincidental how the price is behaving at the moment. And if there is anything I can say, I spoke about this yesterday in deeper detail, but Bitcoin especially, and crypto, some cryptocurrencies are a direct offense against governments and in financial institutions or centralized ones. And the reason is because crypto represents freedom financially for the average person, okay? Because of the infrastructure of how Bitcoin was created, how it's set up, there's a limited supply, a maximum supply, not just a total supply, okay? Which means that it is a valid area where you can store your wealth in, because over time, there isn't going to be inflationary factors affecting your wealth. Whereas with every currency that exists on the earth, okay, there are inflationary factors involved all the time. So this is another important factor as to why I know for a fact that, as I said yesterday, even though, when the internet.com, bubble burst and things like that happened and then the market crashed, that was really because of human psychology. With crypto, yes, there is human psychology involved, but crypto is literally at war with the powers that be. Okay, internet and tech stocks in those times of internet development weren't at war. The government had the internet a long time ago and they chose to release it, okay, the information about it. So it's not exactly the same thing as what we have going on with crypto. Crypto is completely different. The topology of the market is different. Institutions haven't been, for the first time in history, the first people to get in on this. It has been normal people. So this is something for the people, by the people. And because of this, all right, it's affecting, if crypto becomes mainstream, many governments are going to collapse and the banking infrastructure is going to collapse because people are going to realize how much the government has been scamming them out of their money. Okay. Now, for us in the Western world, maybe it might not really touch our heart, really hit home to us about this. But when you are somebody from countries that are not necessarily first world, you find out that many people who leave their money in savings accounts in banks have come back and the bank has gone broke and run away with their money. Okay, and so there's a lot of things going on that you may not be able to see, but you hear of. And I would suggest please watch the video I put out about the Evergrande situation, because that is part of the situation that we're going through. So keep your eyes peeled. All right. And I would say don't let what you see, affect, your decisions. Rather look at what the market is doing from every aspect, before you make a final decision about what you think about crypto. But anyway, continuing on, we are getting to a very interesting phase in the world. And I would suggest that it's time for you to start really paying attention, guys. But anyway, let me not digress, because I feel myself digressing. Whenever I talk about this stuff, I get passionate. But anyway, coming back to where we are with the price action. So there are liquidity gaps. Now, if I zoom in, there are more than just these liquidity gaps here. So if I go back here, you can see the next set of gaps is down to the 18 mark, and they need to be filled out, guys. All right, there's a few gaps here. Now, this one is a bit of an optical illusion because it feels as though the gap hasn't been filled. The gap almost has been filled. There's about $20 of a gap not filled on it. Just that's all. It's a very, very tiny one. Okay. And if I scroll back here for the final gap that we've been talking about, there's two more. So if I scroll back a little bit, take this off here. There are a few more gaps here. So here it is. Here's the gap I was talking about. So the range is a lot smaller. I'm going to pull this in. Very tiny. So 932 to 9776. That's the lowest down gap that is on Bitcoin that needs to be filled out. And then there's another set, which is the other one, around about 11 right here. So 11,191. Only a few dollars, down to about 11,109. So about a $70 gap, something of that nature. All right. So I would say keep your eyes peeled, guys, in this market, because again, if the price is going to fill this gap, there needs to be a very strong reason to. Institutions and governments, which are the most powerful forces in a nation, do not want to see crypto win, because if crypto wins, they lose. It's not the same as the internet, guys. This is why the war is so strong. This is why there's been so much manipulation on the price. And I don't really believe it's done yet. This Evergrande situation may really affect what's going on with crypto. And I want you guys to be highly aware of it. So anyway, on the more lower down timeframes, if I go right here to the supply zone here, the price has just entered into this area of supply. And what we've seen here is that the previous week, if you notice what the market has done, we have a body close beneath the previous week and a supply zone form on that, which is a confirmation that the price will be continuing short. And Bitcoin is doing that right now. So where's the next target? Well, there's a gap that I picked up on at 32 that never got filled out. And I believe the price is going to this 32,500 to 32,574 mark. This is what I would say to look out for if you want to, get a trade on Bitcoin. All right. Now, since the market is moving short, all right, I'm going to switch over back. I hope you guys understand the gaps. If you have any questions, just give me a shout. But I would say, if you have any questions, guys, about anything, let me know. At the moment, every crypto is demonstrating the same signs. And so it'll be very difficult for me to kind of give you guys, look at this pair, unless there's some sort of fundamental around it. But at the moment, in reality, every crypto is behaving about the same. So I think I'm going to leave it there. If you guys have anything you want me to look at, let me know. If not,